Welcome to the Organic Crop Insurance 101 webinar hosted by the Organic Agronomy Training Service. This event is being recorded and will be posted online. I am Mallory Krieger, National Program Director with OATS. OATS is a collaboratively managed training program for agricultural professionals working with organic and transitioning farmers in the United States. We seek to grow domestic organic production by strengthening the educational support network of agronomists, certified crop advisors, extension agents, and technical service providers. Our aim is for every transitional and certified organic farmer to have robust access to technical service expertise to provide unbiased, science-based agronomic support for their farming operation. If you would like to keep up to date with the events and happenings at OATS, I do recommend that you subscribe to our mailing list. I'm going to drop the link into the chat. We don't send out that many emails, and we only speak when we have something to say. So I do recommend that you join that mailing list if you aren't already on it to get notifications of upcoming programs. Some great programs that we have ongoing on many topics include our monthly Organic Advisor Call series, where we interview farmers and experts. And we also host a listserv where discussions among organic advisors are encouraged to be had. We are also currently enrolling participants in the Organic Field Crop course, a training program for ag professionals who want to better serve organic field crop farmers. Enroll by March 20th to secure your spot in the next class. In addition to today's webinar on organic crop insurance, OATS is also developing a podcast series exploring the ins and outs of crop insurance for organic producers. We are launching an online video-based course on organic crop insurance topics for ag advisors in addition to that podcast. I would like to extend many thanks to the USDA Risk Management Agency for providing the funding to develop and host these crop insurance education programs. In today's webinar, we will begin with an introduction to the federal crop insurance program given by USDA RMA Organic Specialist Sarah Kleethermes, followed by a talk by Organic Crop Insurance Agent Megan Vaith on specific programs available to producers in this region. We will then be joined by Ron Miller, who is an organic farmer in West Central Iowa, and he will share his experience with selecting a crop insurance program for his organic farm. We will have time for questions and group discussion at the end of the webinar. So if you have a question during the presentations, please drop it into the chat and I will make sure that it gets answered. With that, Sarah, would you tell us a bit about RMA and the Federal Crop Insurance Program?
Thank you, Mallory. Like Mallory said, my name is Sarah Kleethermes. I am a policy administration specialist at Risk Management Agency. Primarily, my role is to write the crop insurance policy and help create educational materials for crop insurance changes that I work on. One of them is organics, and I've been working in this role for 14 years, and I'll start my 15th year this summer. So what is RMA's role in crop insurance? So RMA works with legislators and congressmen to create crop insurance regulations and modifications to non-regulatory policies. So an example of a legislative crop insurance impact and change would be the Farm Bill. So a Farm Bill comes around every few years. There is one up and coming, so you may be hearing about that. If there are changes in that for crop insurance, then folks like me would work to create the best program we can and the best changes for farmers within that statute. Another example of an administration change, it might be a funding change for organics. There is a transitional and organic grower assistance program that Megan will talk about later on. This is a change that was given to us to change our policy for the 2023 crop year. And some more information on the program. It is a private-public partnership which means private insurance companies have a standard reinsurance agreement with RMA to sell and service the program to farmers. And then the next step in this program is insurance agents and loss adjusters administer the program with boots on the ground. So on my slide, I have a few statistics on crop insurance. It does protect from naturally occurring weather events. On here, you can see flood and drought are a lot of the book of business losses that we see, but this also includes high wind, things like a derecho or a tornado, also hurricanes more on the coast. So it's a naturally occurring weather event that negatively impacts your crop, and that's what we're covering. So finally, if you check the last bullet point, this shows how much the program has grown since the year 2000, and right now we're sitting at $190 billion in liability today. So here I want to touch on RMA's roles and responsibilities. We develop the policy terms, rates, and prices. I am in the policy branch, so it's my role to work on the policy. I mentioned that earlier. And you can see in a later slide of mine how much program growth we have. So one of our roles is to create new products and product expansions. We also collect data for those programs, and there is auditing and oversight of finances and market behavior. So some of those auditing would be in a compliance role. And we are the primary reinsurer of the program, and we do compensate insurance companies as part of that reinsurance agreement. Next are the crop insurance companies and agents roles. So the insurance companies, those are companies, for example, Great American or Rain and Hail. And those companies have sales. They manage agents and issue policies. There are claims, and they work in quality control and assume risk for these policies. And then the next step into the program is the crop insurance agent. There are the folks with the boots on the ground that you'll see. They sell policies and educate producers on what is available in their area and what crops. And they're the face of the program. So you're going to see those people out, doing the good work on the ground. And they often write for many companies. So I just mentioned two specific companies. I mentioned Great American and Rain and Hail as an example. A crop insurance agent may write a policy for both companies. Lastly, the farmer producer. So what do they do when it comes to crop insurance? They will buy the policy. They'll provide history to support the right crop insurance program for them, and set up their crop insurance so that they have they're covering the right amount of acres and the right crop. So that's the planting and acreage, plant and report acreage. So they're going to plant the crop and then report what they have out in the field. And then they'll pay the premium on their crop insurance policy. And if then there is a loss, then they would notify their crop insurance agent in a timely manner. And finally, if there is a loss, that loss can be worked by a loss adjuster, and then they'll receive a payment. So this is a neat graphic. It really illustrates how far organic has grown and how much organic crop insurance has grown since 2013. You can see where the policies have started at about 5,000, a little over 5,000, and then all the way up to 2022, a little over 11,000 policies for organic. And then you can also see the acreage grew with that as well. So that's just a really neat progression about how the organic program has really grown throughout the years. And this is a really fun slide also. I like to highlight the top 10 organic commodities insured. And this is just our book of business. So depending on what state you live in, this might be interesting to you, where the top crops for crop insurance are. This includes the acres, liability, and premium for those crops. There's a little graphic on the side that says producers have purchased organic coverage for over 70 crops. I just want to emphasize there are more than 70 crops available for crop insurance in organic. We have an organic and an organic transitional offer for almost all of our crops. There are some exceptions, but that's very few. So if you are looking for a specific crop in your county, you're most likely going to find an organic certified or organic transitional practice for that offer. So I'm going to go ahead and turn it over to Megan.
Yes, thank you, Sarah. So I am Megan Baith, and I own Northborn Organic Crop Insurance. So in the scale that Sarah was talking about, I fit under the crop insurance agent category. So I am the one working directly with the farmers on what crop insurance options they have available to them and making sure that they're insured for the year. So I'm going to go over some crop insurance options specific to organic farmers. So here's kind of a list of what we're going to go over today. First and foremost, what is a crop insurance policy and how does it work? Some insurance options that are available only for organic producers, some recent crop insurance changes, and then as Sarah touched on, the transitional and organic grower assistance program, which is exciting for farmers for 2023. So what is crop insurance and how does it work? Crop insurance is a policy that's in place to protect your operation or your crops from any sort of natural peril, which Sarah already touched on. Most of them are either like too much moisture or not enough, but it could be, like she said, wind, hail, any other extreme weather event. But also if a farmer has revenue protection, he could be protected against a lowering price throughout the year too, a price loss. Coverage options are available for farmers from 50% to 85% in 5% intervals. So this gives a farmer quite a few options on what type of insurance to purchase, depending on what kind of guarantee he is needing to cover all his input costs. Premium subsidies are different for every level of coverage and for enterprise unit structure as well. And so as you can see on the bottom, there's a subsidy chart here. I'd say most farmers fit between the optional unit and enterprise unit structure. But just for the sake of today, we could look at the enterprise unit column and go over to 75% coverage, which I'd say most farmers are between that 75% to 80% area level. And so you can see at 75%, a farmer that has enterprise units on his policy receives a 77% subsidy. And so this means he is only paying in 23% of the crop insurance premium. Crop insurance policies are available by crop and by county, which gives producers options to either insure one crop and not another, or one county and not another if they want, or they can choose different coverage levels and different options on their policies per crop and county. Why is crop insurance important? Why are we talking about it today, making sure that everybody's aware of it? The main reason is because this is the only input cost that a farmer can have that can actually guarantee him some sort of revenue at the end of the year. They can plant all the seed, put down fertilizer, but if a disaster strikes and there's no crop left at harvest time, those input costs aren't going to give him any money back. Crop insurance is there to protect farmers for this cause. And so purchasing crop insurance will guarantee that you have some sort of revenue throughout the year, as long as you follow the crop insurance plan. So here's an example of how a crop insurance policy could work. And this is for corn. So on the left, you can see we calculate the bushel guarantee by taking the approved yield of 200 bushels, which means that over the last 10 years, this farmer received about a 200 bushel average on his corn crop. Take that multiplied by the coverage level. Here we used 80% as an example to get a bushel guarantee of 160 bushels per acre. So at harvest time, if this farmer is harvesting and he receives less than 160 bushels per acre, he will trigger a loss. On the right side, you can see how we calculate a revenue guarantee. You take that original bushel guarantee of 160 bushels and multiply it by the crop insurance price. And this crop insurance price here was the price as of last year, so 2022, of $11.72 to get him a guaranteed revenue of $1,875. So this means if he had a complete disaster and no crop left at harvest time, and there was a 0 bushel yield out there, he would get $1,875 per acre on his crop insurance policy. So that crop insurance guarantee can change throughout the year depending on where the harvest price lies. So the price for crop insurance is calculated 2 times throughout the year. I'll get into this a little bit more later, but here is how it could impact your policy if the harvest price goes up. So on the left side, you can see that harvest price changed from the projected price of $11.72 all the way up to $12.80. So farmers are able to have the higher of either the spring or the harvest price. And so this farmer was able to substitute that spring price for the harvest price of $12.80 to increase his guaranteed revenue all the way up to $2,048. On the right, you can see the calculation for if the harvest price goes down. And how I calculate this is I take the guaranteed revenue, the original one of $1,875, and divide it by the new harvest price. And in this example, I use $10.75 to get us a new bushel guarantee of 174. Now, when this producer is harvesting in the fall, if he falls below 174 bushels, he triggers a loss rather than having to fall below 160 bushels. This calculation is kind of funky, it seems like, but realistically, if the price goes down, it requires more bushels in order to reach the same amount of revenue. So that's kind of why the bushel guarantee changes a little bit there. So revenue protection is the policies we just went over, which in my opinion is kind of the premier crop insurance a farmer can get. And so oftentimes I get asked, can I purchase revenue protection on all of my crops? And it's on a case-by-case basis. So corn and soybean coverage is available in most areas. But then when you get into more specialized crop, it is available county by county. So it depends on where you're located. So here's an example from the Risk Management Agency on where coverage is available for corn on revenue protection. So all the areas that are green on this map shows where coverage is readily available. And then the white areas show where you can't just go and get crop insurance coverage without submitting a written agreement or some sort of documentation to obtain coverage, which we'll go over in a little bit. So as you can see here, most of the US is already covered where it's not too hard to get crop insurance coverage on the corn. Then you get into soybeans where it doesn't cover as much as the US, but it still covers the majority of the parts that actually grow soybeans. Then we get into oats, which spreads it out a little bit more, still fairly well covered. Then we get into a little bit more specialized crop like sunflowers, where we see there's just a strip down the middle of the United States where you can get crop insurance easily on sunflowers. And so what can a farmer do if he lives in one of those white counties where coverage is not readily available? This farmer has 2 main options. He can either go through the written agreement process or purchase whole farm revenue protection. So written agreements is basically a packet of information that you submit to the crop insurance company requesting individual coverage on that crop if the crop isn't readily insurable in that county. So if it was in one of the white areas. This document is due by sales closing, which is September 30th for most fall planted crops and March 15th for most spring planted crops. This could vary a little bit based on some more specialized crops, but for the most part, all the crops will fit in this category. The agent will work with the farmer in order to prepare the packet to submit it to the crop insurance company. And this does require some supporting documentation, which we'll go over on the next slide. And in my opinion, I think it's really necessary in order to expand the crop insurance program in the future to make coverage more easily available for those crops in the future. So when RMA is looking at expanding crop insurance and maybe making coverage more readily available for like sunflowers, like we just went over, expanded into more counties, one of the first things they're going to look at is to see whether any written agreements have been submitted for sunflowers in that county. And if there haven't been any written agreements submitted, it's going to show that there's really not a need for crop insurance in that county. So I just think it's really important that farmers and ag advisors are aware that written agreements are an option to achieve crop insurance, and they might be a good avenue to help expand the program in the future as well. I should add that this isn't the only avenue that RMA looks at to expand crop insurance, but it is one of the main ones. So here are some of the requirements in order to qualify for a written agreement. So the farmer and the agent work together to write down the dates that the crop is normally planted, the name, location, and approximate distance to the place that you're going to deliver the crop after harvest. If it is irrigated, you have to list the main water source and the method of irrigation. And then the crop history, which is where most farmers get a little bit hung up at.
You have to verify that you have at least 3 years of crop history on either the crop that you're requesting or a similar crop. And this isn't just what you might think a similar crop is. This is off of a chart in the written agreement handbook for what is established as a similar crop. And we will go over those on the next slide as well. If a farmer is just starting out and maybe they're in an LLC, so they do not have history themselves of planting that crop, but someone in the operation that has at least 10% ownership has 3 years of history of either the crop you're requesting or a similar crop, they can use that person's history in order to obtain the 3 years of history to apply for the written agreement. Soil maps are oftentimes also required, as well as a letter of adaptability from an ag expert. And this often comes from a certified agronomist or a conservation specialist. So here is showing a list of similar crops available for canola. And so if a farmer was wanting to plant canola for the first time, he had no history, but he did have history, 3 years of history of any of the crops listed here, he would be eligible to apply for crop insurance for canola. One important thing to add is he doesn't have to have 3 years of history of the same crop. So if this farmer had maybe 1 year of history of barley and 2 years of history of oats, he could apply for the written agreement that way because he still has 3 years of history from crops listed under common crops in the written agreement handbook. Here is a list of similar crops for sunflowers. And so this could be interchangeable. Like if you were wanting to apply for written agreement coverage for popcorn, you could just replace sunflowers for popcorn on here and use all of these crops as history. Whole farm revenue protection was the second option that I had listed for ways to get crop insurance if crop insurance was not readily available. And this is kind of a whole different way of looking at crop insurance compared to your standard revenue protection crop insurance policy. So when we're talking standard crop insurance, a lot of times farmers are concerned about the yield, whether they'll trigger a loss if their yield is low enough. This takes a whole different look on it where you're protecting the overall revenue of your entire operation rather than taking it down to a yield by yield basis. So the guarantee for whole farm revenue protection will be based on your previous allowable revenue versus your expected revenue. And allowable revenue is basically the revenue that you've received in the past that particularly pertains to the crop. And so all of whole farm revenue protection is based on Schedule F history. So when you look at a Schedule F on the revenue side, it's also going to show program payments that you might have received from FSA or custom hire payments. Those will be discluded from this and not counted in revenue because they didn't particularly pertain to that specific crop in the field. And so in order to be eligible for whole farm revenue protection, you have to have 5 consecutive years of farm tax history. Beginning farmers get an exception and they only need the 3 years. It's a little bit of a help to them. And then coverage options are available from 50% to 75% for farmers unless you have 3 or more commodities. And if you have 3 or more commodities, you are also eligible to purchase 80 and 85% coverage as well, which will also give you a whole farm subsidy discount, which makes your premium a little bit cheaper. So one of the best things about whole farm revenue protection is it covers pretty much any crop, including livestock as well. I should add that. So some of the things that are not included are timber, livestock for show, sports, or pets. But if you're just growing livestock to harvest them or raise them, that could be included on here. So this is really ideal for diverse farmers that are maybe planting crops that are not common in the area. We are all well aware that organic farmers have more crops in their rotation typically than a conventional farmer. And so a lot of times they're planting more specialized crops. And so this might be an avenue to receive crop insurance if they are not eligible for written agreements yet because they do not have the 3 years of history. Some of the downsides to whole farm revenue protection are the amount of paperwork involved in it. Before you can even get a quote to see how much whole farm revenue protection is going to cost versus what your guarantee is going to be, you need to submit 5 years of tax returns in order to calculate that number. And then there's also paperwork throughout the year that you will need to fill out. So this oftentimes scares farmers off and they don't want to do it because of the paperwork requirements. But RMA has really looked at this and tried to lessen it. So it is getting better and better as time goes on. So in my opinion, I don't think it's something to shy away from, but it really could be a good option for farmers on their operation. One of the other downsides to whole farm revenue protection is claims are delayed more than your standard revenue protection policy. So under standard crop insurance, farmers are used to harvesting the crop in the fall, and if their yield falls below their trigger guarantee, then they call their agent, file a claim, the adjuster comes out, fills out all the paperwork, and then they get paid in a fairly quickly manner. On this, since everything is based on your tax history, you won't know if you actually trigger a claim until your taxes are filed for that year. So no claims can be settled until after tax season. And so instead of getting paid out in the fall like farmers are used to, they won't get paid out typically until the following spring. Contract pricing, in my opinion, is one of the biggest advantages that organic farmers have when it comes to crop insurance. And this allows a farmer to insure his crops at his contracted price rather than the crop insurance price. So if a farmer doesn't use his contracts or doesn't have this on his policy, he uses the RMA established price, which is calculated by taking the average daily closing price throughout the entire month of February based on the Board of Trade and averaging it together. And that will come up with a crop insurance established price, your spring price for the year. They then calculate that again in the fall to figure out the harvest price, but the main one we're going to focus on here is that spring price. So we're all aware that organic crops are not traded on the board like the conventional crops. So they do take that average of the conventional crops and then they multiply it by a factor in order to give organic farmers a little bit more value for what their crop is worth compared to the conventional farmer. So for 2023, they take a factor of 1.878 times the conventional crop insurance price on corn, and then 2.056 times the conventional crop insurance price for soybeans to come up with the organic crop insurance prices. In order to use contract pricing instead, you have to have this special option on your policy by sales closing, which is often March 15th, which is right around the corner here. And then you have to submit the contract to your crop insurance agent by acreage reporting deadline, which is most often July 15th. What I suggest most farmers do is have this option on their policy in place, just in case they want to use it. So if a farmer doesn't have their contract by July 15th, or maybe they don't want to submit it because their contract is lower than what the crop insurance price is set at, they don't have to submit it. And if they don't use it to get extra guarantee on their policy, they don't pay anything extra for it. So I always suggest that they have it on their policy in place and then use it if they want to. Otherwise, it doesn't cost them anything to just have it there in case they want to use it in the future. Contract prices are capped at 1.5 times the organic crop insurance price on corn and 1.75 times the crop insurance price on soybeans. From all the numbers that I have seen, there are very few contracts that go above this cap, so it's really not too big of a restriction. Here's an example of how contract pricing could really help a crop insurance policy. So here I use soybeans because this is a really good example from the 2022 crop year. So on the left, you can see that we took the bushel guarantee of 48 bushels times the spring crop insurance price for 2022 of $27.41 to get a guaranteed revenue of $1,315. On the right, you can see that this farmer was able to get a contract for $38 a bushel on his soybeans. And so since he had contract pricing on his policy and submitted his contract to his agent before acreage reporting deadline, he was able to substitute that $27.41 for the crop insurance price of $38, giving him an extra almost above $500 per acre guarantee on his operation. This made a really large difference for farmers last year, as a lot of farmers were drought stricken and triggered crop insurance claims. This helped them receive a little bit more revenue just by having this on their policy. Pasture rangeland forage is a really cool policy that insures any perennial haying or grazing land that you have. It looks completely different than your standard revenue protection as well, because it is all based on lack of rainfall. And so it is index driven, which means that they have looked at NOAA weather data all the way back to 1948 in each area, and they've taken the average rainfall all the way back to 1948 as an index of 1.0. The highest coverage level you can have on pasture rangeland forage is 90%. So in the time period that you select, if the rainfall falls below 90% of average, you trigger a claim. So this coverage covers an actual grid area, which is typically 17 by 17 miles. So the numbers might not reflect what rainfall your specific farm had, but it will be relevant to the area. In order to figure out how to set up a crop insurance policy under pasture, rangeland, forage, the farmer has to select at least 2 different intervals of 2 months each to ensure his crop in. And so if he is thinking that he's going to have cows out in pasture in the summer and wants to insure May, June, and July, August, he can absolutely do that. But you're not limited at 2 months each. So if you want to spread your insurance throughout the entire year, you have the option to do that. I really like PRF because it allows for more flexibility than other crops. And so under PRF, you can actually insure maybe one field if you want to and not another, or one pasture, however it may be, where on your standard revenue protection, if you have corn on your policy, any acre you plant to corn in that county is automatically having to be insured, where here you can kind of pick and choose what acres you want to insure. Another really cool thing about this is that the reporting process is quite diminished compared to other crop insurance policies, where the producer doesn't have to report any yield or rainfall history on his operation. It's all tracked based on the NOAA weather stations. And so if there is less than average rainfall and it triggers a claim is automatically filed with the crop insurance company, and then they will cut a check about 60 days after that time period is over. So the producer doesn't have to call in and say, I don't think I got any rain. I think we might be triggering a claim. So it's pretty cool. Sales closing on this policy is December 1st for the following year. So if people are wanting to sign up for this, you would have to sign up by December 1st of 2023 in order to get insurance for 2024. So here's a bit of an example of how this policy could work. And this is on grazing acres. And I just picked a random area in Sioux County, Iowa, because that's where I grew up. So that's where I wanted to go. And so here you can see that I split the acres into 2 different 2-month intervals. And I did 60% of acres in June, July, and 40% in August, September. So you pick different percentages on how you want to insure your acres throughout the months of the year. And on the first column on the left, you'll see what year. This is a 10-year history of how this policy would have paid out for a producer. And then you can see the indemnity, which is what crop insurance has triggered. And then the next column will be the premium. So in this area, the premium on the grazing acres, and this is at 90% coverage level, 150% productivity, so as high as you can get. The premium was $8 per acre. And then that last column shows the profit loss, what years paid out, what years didn't, how much money was generated over a 10-year period. So as you can see here, this farmer only made positive money 5 out of the 10 years, but the years that did trigger losses triggered quite substantial losses. So just something to keep in mind if you're working with farmers that have haying or grazing land on their operation. Livestock risk protection is a crop insurance policy that is available for cattle and swine, and it is solely on a decline in price. So death loss is not accounted for in this. Farmers are able to purchase endorsement periods, which is a time frame from 13 to 52 weeks for their either cattle or their swine. And the farmer should choose the time period either when the livestock is closest to being sold, or they reach the desired weight, or they're going to go out of the weight class, because there's different weight classes that you insure your livestock in. One of the big reasons I wanted to bring this up is it's become really popular over the last couple of years. So as you can see from that graph on the right, on the top, the sales weren't that much until 2021, and then they just kind of skyrocketed. And that's because they reestablished the subsidy factors. So they increased them by 20%. So LRP is subsidized, and you can see each coverage level there on the right as to where it is subsidized at. One really cool thing with this policy is it's one of the only policies that you can actually purchase all the way up to 100% coverage and still receive subsidy. So that's really beneficial for farmers. Indemnity is triggered on this crop insurance policy if the actual ending value is less than the coverage price. So not necessarily what you sold your livestock for. So here's a chart showing feeder cattle in the steers weight 2 category, which is 600 to 900 pounds in a 13-week time period. So here in the middle, and I don't know if you can see my cursor here, but it says expected ending value. So they're saying at the end of these 13 weeks, and I just ran these numbers over the weekend, so end of the 13 weeks would be June 2nd. They're expecting the ending value to be $203.01 per hundredweight. So this top level here is showing a coverage level of 99.7%, which gives you a guarantee of $202.43 per hundredweight. And so on June 2nd, if the ending price was less than 202.43, you would trigger a claim. So it's a really nice policy in order to have protection on your livestock without having to go through a broker, and it is subsidized. So it is pretty nice, and it's starting to become quite a bit more popular. So I just wanted to make sure everybody was aware of it. Relay cropping is fairly new in crop insurance. This was announced for the first time in 2022, where relay crop soybean acres could be insured under federal crop insurance with some restrictions depending on the area. So this is available on case-by-case basis with written agreements. And in order to achieve this, you have to have evidence of practice viability in the region. So typically that is a letter from an agronomist or a certified professional, or a conservation professional, I mean. Some regions require more history than others. So here is a map showing the relay crop soybeans history requirements. And so in zone 1, you don't need any requirements or any, I apologize, you don't need any history in order to obtain crop insurance on your relay crop soybean acres. In zone 2, which is that light blue area, which is kind of out of the region on this call, you need 2 years of relay crop history in order to submit the written agreement and get insurance on those acres. And then in zone 3, that darker blue area, you have to have the 3 years of crop insurance history in order to submit the written agreement and get crop insurance on those acres for the coming year. Double cropping expanded the crop insurance coverage availability in 2023 for both soybeans and grain sorghum. So I just wanted to show the maps here. And this allows farmers to raise 2 crops in 1 year. And so if we look at the double cropping soybeans map on the left, you can see that the blue area, you can have coverage readily available. You don't even have to submit a written agreement. It's just there and it's in place. The green area, you have to submit a written agreement, but you are not required to have the 3 years of history. So still fairly easy to obtain insurance. The yellow area, however, you can submit the written agreement, but you have to have the 3 years of history of double cropping soybeans in order to obtain crop insurance. Transitional and Grower Assistance Program is really cool. It is available in 2023 for certified and transitioning organic farmers, and it has not been announced that it'll be continued in the future. So I really want to make sure everybody's aware of it this year. And I think Sarah would agree with that because she touched on it on her presentation as well. And so what this does is it allows extra premium assistance for organic farmers. So transitional organic crops receive an additional 10 percentage points of subsidy. Then certified organic crops receive an additional $5 per acre premium discount. And then those farming or insuring under whole farm revenue protection, they receive an additional 10 percentage points of subsidy on theirs as well. And this is eligible for all the crops that are listed on the bottom of the screen there. And one thing to take note is that pasture, rangeland, and forage is included in this TOGA policy. And so as the example we looked at, the premium was only $8 per acre. That would have changed it down to $5 per acre, or $3 per acre, excuse me, on pasture, rangeland, forage. So that would have really made a difference there, but it is only available for 2023 at the moment, and we will see if they continue it more in the future. And that was all that I had. And next, Ron, if you want to unmute yourself, he will take it away. And Ron is our farmer that we have on the line today, and he is going to talk about how crop insurance works for him, and maybe some challenges or advantages that he's had in his operation.
Well, my name's Ron Miller. First of all, I'd like to thank these ladies for doing this. This is good. A lot of that stuff may seem foreign to a lot of people that you ladies have just discussed. So this is good. My operation, I'm located at Harlan, Iowa, West Central. I have about 300 acres of crops. I grow corn, soybean, oats, and alfalfa, no livestock. I started farming in 1999. I started with crop insurance for conventional farming in 2005. And I started out with like 80 acres of organic, moved on, kept transitioning a little bit more and a little bit more over time. I'm fully organic now. I guess there's probably in my county less than a dozen people who are actually organic farmers. I think probably the best thing I can say about that is when I found out about Megan and crop insurance from her, because as far as my history with crop insurance goes, I started out part-time farming, so my job was my insurance. Neighbor stopped one day and talked to me I should get some insurance. I'm in a Hale Alley on one farm. I started out with conventional, even though I had some organic. That year I got nailed. I had a farm that was zeroed out, 100% loss. And that was great. I had crop insurance for that, but I didn't get covered by the organic premium part of it. So I had a loss, but I always figured I was ahead on the premium that way. I couldn't lose from this point on. After I met Megan, we kind of discussed what my farming operation was. I pretty much changed to full organic at that point. And I think the system was evolving then. We've made changes as time went by. The reasons why I needed Megan or I needed crop insurance, number one, what I just said. I have a farm that's located in Hale Alleyway, as far as I'm concerned, in our area. About every 2 to 3 years, you're going to get hit. It's guaranteed. I needed something to help with that. Secondly, forward pricing. That year I had half my crop forward priced, and I lost about half my crop that year from that hailstorm. So that made me a little bit shy about forward pricing anymore after that point. But with crop insurance, it helped. It also helps me keep a minimum income, I guess is what I'm saying with this, or a baseline income. I know what I can make even in a bad situation, so that purchases, expansion, whatever you want to say, I have a little bit better planning at doing that. And also rotation length, what crops work good, what crops don't work bad. If you're insured, you're willing to try different things, lengthen things out, shorten them up. It makes you think from a little bit different perspective than just, if I do something wrong, it's going to come straight out of my pocket. And what do you do? The crop insurance kind of helps you average things out over the good and the bad. And organic farming is a 10-year average. You can't look at 1 or 2 years. It's a long-term situation. The final thing for reason for using is the derecho, or a catastrophic event. I was close to that. Didn't get hurt by it, but I was within 10 miles of where it did quite a bit of damage. That could have been me. That's between the being hailed out and the possibility of a terrible event. It just made crop insurance something that was absolutely important for me. As far as my history with insurance, like I said, I first started out self-employed, insuring myself. Then I went to regular crop insurance, learned kind of the hard way you don't get a premium. And then finally with Megan, we fine-tuned it to the point now where me being fully organic, we've discussed enterprise units, things like that I would say to most of us farmers we're naive at best. And that's what kind of brings me to the last part of what I wanted to talk about, was the problems of organic insurance, as far as what I can see and what I've talked to other farmers about. Number one is the planting date. We want the soil to be as warm as possible. So when we plant that seed, it pops out of the ground. Lots of times, June, hate to say it, but June is the time, and you may take a yield loss just to get that stuff out of the ground, even though you're planting late. If you can get it out successfully in June, you couldn't in May, you're going to wait it out because you got weeds to deal with, things that conventional farmers don't. The second problem I can see with our insurance, I was watching Megan go through all this stuff here. And there's a tremendous amount. We can start with enterprise units, contract option, how you can tie forward pricing with your crop insurance. The mechanics of this, for a farmer out here, we're kind of dummies when we can plant a crop, but we can't always be in tune all the time with all the different things that are possible. one problem I guess I would say is not having a Megan or somebody comparable to her in our area. There's just a lot of stuff we don't understand. And what's been created since they showed that slide since 2011, whenever organic was started, a lot of us don't realize all these things. And that's why I say I thank you ladies for doing this, because I'm sure I'm not the only dummy out here trying to work our way through it. With you gals and this type of program, it should help us. And that's pretty much what I have to say.
Well, thanks, Ron, and thanks for all the compliments. I should add too that there are resources out there for farmers that they can find, or ag advisors that they can find, qualified crop insurance agents for their farmers or for their operation. RMA does have an agent locator tool, which will help you find any agent in any area. You can kind of narrow it in on a specific area. A lot of times what I suggest for organic farmers or organic ag advisors specifically in this realm is ask around who are farmers working with that's a good agent in their area that could be qualified and could work really well for them. Or if you're going to an organic farming conference, are there any organic agents there? What do they know about it? I have heard in the past that one of the best questions an organic ag advisor or farmer can ask a crop insurance agent to see if they're up to speed on organic practices are simple as, do you know what an OSP is? As simple as that. And if they're familiar with what an OSP is or what it even stands for, then they probably know enough about organic crop insurance that they can help you or at least point you in the right direction. So thank you, Ron, for all the compliments. There are more resources out there. I just want to make sure everybody's aware of that. And if anybody has any questions, or I don't know if any came through the chat so far.
Yeah, we have 2 questions in the chat so far. The first one is from Andrew. You mentioned that whole farm revenue protection does not include timber. What about fruit and nut trees or maple syrup? Are those covered in whole farm revenue protection?
Sarah, you might want to jump in here, but from what I remembered, like the fruit, like if you're talking apples, we'll just talk about apples. The fruit, the actual apples are covered, the trees themselves are not. So it's the produce that is covered. I am not 100% sure on maple, but the list of crops that are not eligible is really timber, livestock for show, sports, pets, and there might be 1 or 2 other things, but maple is not on the list. So I would assume that it's included, but I have not had that personally.
Yeah, I'm not sure either. I would definitely look into it a little bit more. I don't have a good answer for you on the maple syrup. It's pretty specific.
And our second question in the chat is from Jenny. I'm interested in learning about USDA RMA's micro insurance program. Can you offer some insight into that program?
Absolutely. So microfarm was new in 2022, and it actually fits under the whole farm revenue protection umbrella. So this is available for basically smaller farms, a lot of times more specialized farms as well. As of 2022, it was only available for operations that had less than $100,000 revenue for the year, for their approved revenue for their history. But now they've expanded that to $350,000, so it's a lot more attractive for farmers. So this works really well for, in my opinion, for farmers that are maybe growing produce or some sort of specialized crop that they're selling at a farmer's market. And the main reason that this really works well for them is because under the typical whole farm revenue protection umbrella, a lot of times you need to know what each crop made by like yield wise and price wise, where under microfarm, everything can be kind of combined together. So if you're going to a farmer's market and selling multiple different crops at the same time or commodities, all the sales for those can be averaged together and insured under that umbrella. So really beneficial to smaller operations. There's less reporting requirements under microfarm than the big whole farm revenue protection umbrella. And I don't know, Sarah, if you have anything to add, but it is really great for those farms that qualify. And I should add too, if you're farming a crop that like corn or soybeans or anything like that, that you can purchase revenue protection on, you are not eligible for microfarm. But if you're planting crops that do not have crop insurance available, this is a great avenue.
don't have a lot to add, but I did drop in the chat a little fact sheet. I know that Oates and Mallory's group is really for education and bringing to some awareness to some programs. And so I did add a sheet that RMA does have on its national website on microfarm, and that may help you, get your research started on that.
Thank you. We don't have any more questions currently in the chat, but I do have some questions in my queue. So those for participants, please throw your question in the chat. Oh, we just got one from Leroy. I am transitioning and it has been many years since oats was grown. Thus the acres are almost zero. How many years back can I go for history?
Good question. Kind of a two-part question. Really, as far as you want to. A lot of times farmers go back the first 10 years and then there's procedures in place for if your history is older than 10 years in order to receive the county T yield. But in your situation, it's a little bit different because you're going from conventional to organic. And so every time you start over in a new practice on crop insurance, you kind of start over with a new yield history as well. And so if you're just starting transitioning and you've never had transitional organic oats before, you will be starting with the county T yield that is set for transitional organic oats. So you will want to go back and dig up some of that old history in order to get 100% of the T yield, depending on how old the history is. But you will also just be starting over with what the county T yield is. Hopefully that answered your question.
So it sounds like the answer is if it's going from conventional organic, you're starting over with history.
Yeah.
Okay.
Yeah.
So a question for both Sarah and Megan. As I said at the top of the webinar, Oats is primarily focused on helping farmers access technical assistance by training ag professionals and advisors about organic crop insurance. And we feel like it's important for ag professionals and advisors to have a good understanding of crop insurance when they're advising clients, even if they're not advising on crop insurance topics, just advising in general on agronomics, that they need to understand crop insurance. So what advice would you give to an ag professional or advisor about organic crop insurance? In other words, what is the most important thing that they need to know about organic crop insurance when they are working with organic clients?
I'm probably going to say two things instead of just one. I'd say the first one is a lot of farmers in organic think that crop insurance is the same as it was 10 years ago. And so the first one I would say is if a farmer is saying, oh, crop insurance doesn't work for me or I don't have any options, push back on that and say that, crop insurance has evolved and there are ways to get crop insurance now and better coverage available than there has been in the past. And the numbers that Sarah showed proved that, because there has just been immense growth in the crop insurance program as far as organic goes. The other thing I would say is communication is key. If an advisor is advising a farmer on a different practice or way of doing things, make sure that it falls within the crop insurance program before that is actually executed on the farm. And if an organic advisor wants to call a crop insurance agent to talk about what they're trying to do to see if it works, I think all agents would be ears open to make sure that the problem is solved before it gets applied in the field. So just make sure everything is up front. There's paperwork processes that agents can fill out and help the farmer to make sure that he can get crop insurance. If he's trying to do innovative ways and practices that are not commonly used, but those need to be done up front in order to avoid any hiccups or surprises at a claim time. So that would be my words of advice.
Yes, I think Megan really answered that well. And I do want to bring back up a note that I mentioned at the beginning of the presentation, that a lot of times I hear, hey, there's not organic coverage for me. And RMA does offer on almost all of the crops an organic transitional and an organic certified practice for their offer down to the county on a crop. So if you do hear that, that's definitely not true and something to look into further.
Yes, and one thing kind of on a different topic that I would like to mention is Ron had talked about how he purchases multi-peril crop insurance on his operation and then hail insurance as well. So hail insurance we did not talk about in the presentation, but that's an additional crop insurance policy that you can purchase that's private. And so it is not federally subsidized, but it's a way to have extra protection on your operation specifically for a hail or wind event, depending on the policy. And so when you look at crop insurance, you can purchase up to 85% coverage, but that's still allowing a 15% deductible for the farmer that he's not covered on. So if you live in a hail alley, a lot of times it's really beneficial to purchase crop insurance that might protect that 15% that you're not covered on the multi-peril side to make sure you have your full value guaranteed in some sort. Now that hail policy isn't going to cover you from a drought. It has to be really kind of a hail event, but it is a good way to get additional coverage on your policy if you're in an area that it applies to.
I've got a question for Ron. Ron, have you ever worked with an ag advisor in any way that helped you with your organics? And could you speak a little bit to whether they had much knowledge on organic crop insurance?
Probably not really. Ag advisor, define that, I guess, would be a better question for me to start with. Megan was probably the first person who ever really walked me through crop insurance. Other than that, I just purchased from the local agent who sold me car insurance and everything. But ag advisor,
I would say your local extension agent or even your seed dealers who are helping you make decisions about production on your farm.
Or the Center for Rural Affairs, Ron, could qualify as that as well.
Yeah, I was going to say the Center for Rural Affairs contacted me a year ago for this very reason. The insurance was kind of, there was no knowledge known. And I will say that that's probably, and I'm not trying, I keep saying Megan here, but before that, it was a blind shot for me. I really just was using regular crop insurance, not organic side of it. You know, yeah, my seed dealer and a few people have given me heads up, but you know, it's more like two guys talking bullshit. And then you say, oh, I use this person or I use that person, you know. No true professional ag advisor. This really is, I developed right along with the organic. We had Ron Rosen and a few people in our neighborhood who were true organic people for years. But like I say, there aren't many even today in my neighborhood that you can talk to or are part of this program. So, or an organic farm. It's really nice to say there's a professional out there, but you know, you look at it on a county basis, how many people in each county. You have to go to the Iowa Organic Conference or something. That would be a place you'd find more people that I would say would fit that bill. Around here, we're so few and far between. We may have 2 or 3 producers, and we could all be going in different directions for who we use for insurance, crops. That's the part that needs to develop. That's why I said, as far as problems are concerned, knowing the mechanics of this, we're dummies out here. We just don't have those professionals. This isn't like you walk into your fertilizer deal for conventional, you get your seed, you get your fertilizer, get your insurance, and you get your financing under one umbrella. We're picking and choosing at every stick there is out here to get going.
Well, Ron, thank you. That's a great plug for the programs that Oats is putting on with this program funded by RMA that, you know, we've got a lot of interesting deliverables coming down the line to try to help ag professionals better understand crop insurance and to also help ag professionals cross-train in organic agronomics. So we are now at time. So thank you all so much for joining us today. I'm going to open up a poll, and I ask that you take a moment to do our exit survey before you hop off the call. This will help us understand whether we hit our targets today with our programming with this webinar. For some reason, with this webinar, it was hard to get out. We will share the webinar recording with you by email in a few days after we've had a chance to get it loaded up onto our YouTube page. And remember to join the Oats mailing list to get notifications of upcoming organic education programs for for ag professionals and for farmers alike. I'll drop the link to that in the chat. If you have more questions that didn't get answered today, do feel free to shoot us an email. My email contact information is on the OATS website, and I can put you in direct contact with our presenters today if you have specific questions that didn't get answered. So with that, please take a moment to complete the exit survey, and thank you very much for joining us today.